Okay, so this is one for you day traders out there. We use some examples from swing trading on daily charts. I want to show you this stochastic setup very briefly. You don't want to go to too much depth with it, but just maybe it will light a few fires and maybe you can go and do some research and kind of, look at some strategies yourself using the stochastics. One thing this worked very well for me in the bear market we had all those years ago in the equity markets. It's a very good tool for when you have extreme momentum in one way and looking for a reversal back in the direction of momentum. Let's explain that a little bit better. So we know that stochastics work on the overbought oversold condition. Overbought above 80, oversold below 20. Generally speaking, you can change that of course to suit you. Now what I've done here is, again, I've not cherry picked this. I've scrolled back on the market. What I've used here is, by the way, is a Spiders ETF, which is SPY, which tracks the S&P 500 pretty much. It's an absolutely identical chart to the S&P 500. The reason I've used the SPY as opposed to the ES, which is S&P 500, is that it's showing us only a regular trading hour session. So from 2:30 UK time to 9 p.m. UK time, which is the US cash session open, which is when the most volume's coming into the market, in the futures market, and the equities are trading, and that's when I generally want to be trading momentum type trades. So what date was this? This is the 20th of April 2017. So what's the idea? The idea is that we're looking for momentum first in one direction and a good trending day. This is a good trending day. In the morning, as in US morning, obviously it's a UK morning, you get this trend. A good move, a gap up's nice as well, but we're just looking at this momentum qualified by the overbought condition on the stochastic, should I say. You can use RSI, but it's not quite as good. It doesn't quite get the overbought and oversold for this specific strategy. That's just my personal opinion of how I found it, but you can have a play around with different settings. This is on the default settings, by the way. So, and also like to also mention, this is a 3-minute chart. That's very important. I shouldn't leave that out. This is a 3-minute chart. So why am I using a 3-minute? Because it's a day trading strategy. A 1 minute's too quick, 5 minutes a little bit too broad. Again, this is kind of the sweet spot. So 3-minute chart, Spiders ETF. Let's go. Momentum, strength, trend, good. All check. Right. Now what I'm looking to do with the same swing trading strategy is I'm looking for the first oversold condition after I've seen continual overbought. So continual overbought, good strength, first oversold comes in here. Now, admittedly, if we're looking for a crossover trade, i.e. we're oversold and then the fast overtakes the slow in the oversold area, this isn't valid and this will not trigger for you because this has not happened. However, if you're just trading it from a pure do we tag into oversold territory, then this will trigger. Again, broadly showing you examples of how this works, not cherry picking really good examples all the time because that's not the way forward. So what happens is we get the momentum, push the upside, starts to rotate down. Very shallow rotation, by the way, which actually does help the cause, because if you're getting momentum indicating a push to the downside, but then price is being supported, then this is all the better. The idea is you look for the momentum, the unwinding, you're looking to buy that first oversold condition in an uptrend on your 3-minute chart. So as it comes down, it tags into oversold, you go long, you're looking for a push back to new highs or close on the high day, whatever. I'm not going to go into how to manage the trade or stop losses. This is purely a perspective of how you can frame the trade using those stochastics. So you're looking for momentum, number one, overbought condition, number two, then you're looking to buy that first oversold condition. Now, the reason it works so well in bear markets or in vicious down days is the momentum is generally a lot stronger to the downside. There's a lot more panic, a lot more volume, a lot more aggression. So you get continual oversold and then looking for the first overbought condition and then cycling back under. Now you can finesse it a bit more, and like I say, you can use the crossover strategy if you want. You can wait for it to come back into the neutral territory from overbought or oversold from the extreme condition. You can adjust it to suit. You can go straight in when it goes oversold. You can use it as a filter and then say, okay, well, I'm going to go in now long, but I want to see some sort of price pattern, some sort of candlestick pattern, or something on the tape, or whatever you like to use to make that ultimate decision. You can use it as just a filter to get involved in. And the great thing about it, again, is I'm really keen on this kind of thing, is that you don't get involved until you see that parameter. Once you're structured and strict with it, it means that, okay, if you're involved down here, then great, fantastic, well done, you're making good money, everyone's good. But you know what? The reality of the deal is, guys, that when you're day trading, you're not always going to be catching the move. By the time it's got here and you've recognised it, you may well not be on it. Or you might have even been short here and been stopped out here, whatever. Right? The point of the matter is, you've seen the strength, now you know you want to get on board. But what you do not want to do is start chasing this thing at highs, because if you do that, you know you're going to get caught in pullback. And we've all done that. We've all done that, whatever stage of a career we're at. You see momentum, you think you want to get involved in it, and you chase it. And you learn not to do that, and you learn to think, listen, this is a bad thing. And this is ultimately where this kind of strategy came about for me, is that to avoid chasing things, but to still get on board that last squeeze of momentum and still make some money out of that final burst. So this is exactly what happens, is you recognized it, you say, yes, it's momentum, there's strength there, I want to get on board. Now all I have to do, in simplified terms, is set an alert for the first oversold stochastic reading, and then look to get long, whether again I stack layers of different signals on top of that, or whether I purely just go and get long here. So it's a very nice way of kind of using a systematic approach, but with a discretionary approach as well, which I believe is the best way of approaching trading, using kind of systems and indicators where possible, or price structure and alerts to then filter trades that you can then use discretion to get involved in. So the one caveat with this is you only take the first condition. So once you've seen a good strength move, the first pullback, you only take the first oversold. My experience is that it doesn't work as well on the second and third oversold conditions or overbought conditions. It's always better on the first one. If we can see another one, great. I don't think we had many trend dates, have we, recently? This doesn't really qualify to me, even though you have got the first overbought condition, and yes, we can say that it worked well. To me, it doesn't qualify. You've got to have strength, continued oversold, and then it coming. Now, if this stochastic hadn't done this and had stayed oversold here, then this first overbought condition here, especially in this time zone here, talk more on time zones later, pinpointing it there, especially with that little break above the high. Can you see that, guys? I love that kind of thing. Let's zoom in, getting excited, because if I saw that intraday, I would be all over that. Let's draw this in properly. There we go. I love to see that kind of thing. So this I wouldn't have taken because it's not the trend day. But let's say you didn't have this. Let's imagine you had the grind lower here, and let's imagine the stochastics was kind of in the oversold condition here. We had the first overbought here around the right time zone as well, and we kind of did this resistance level. It was prior support, became resistance, tagged above it by a few ticks. Can you see that there? Just that candle, and then we rolled over, all in conjunction. This is what I'm talking about, stacking layers of edge on top of each other, and that would be a very nice trade for me. I would like that. But again, we're digressing a little bit, moving off topic, but that's a good way of using your stochastics. So it's a 3-minute chart. It's your first oversold or overbought condition against the initial momentum, looking for a move back and a continue of the trend.